The following is a conversation with Panos Vinieratos. Panos is a mathematician with a deep-rooted passion for numbers and markets. He has established himself as a funded futures trader and technical analyst in the financial markets. With over a decade of experience in education, he has been a professor of mathematics since 2011, nurturing the next generation of thinkers. And now, dear friends, here is Panos Vinieratos.
Panos.
Hello.
So first of all, pleasure having you here on the TradePod.
It's my
We're so
pleasure.
glad to have you in for the opportunity. And before we start, as of our beloved tradition, we would love if you can present yourself, your background in trading and how you start trading. Let's dive deep into it.
Yeah, sure. First of all, I highly appreciate the invitation. It's great to be here.
Thanks.
So yeah, it feels really nice. So I have to admit that. So I transited from teaching mathematics into trading about 3 years ago. Almost at the start of my trading journey, almost at the beginning, I transitioned immediately. I used to be trading forex pairs. I used to trade forex pairs, sorry, but once a friend of mine introduced me into futures trading, and I did some research about what exactly is a future contract and what is the definition and what do you have in comparison with forex trading. It's like it was a no brain decision for me.
Yeah, yeah, we all aware of the comparisons between futures and forex, like
Mhm, mhm,
if it's margin, if it's leverage, if it's like spreads and slippage. Yeah,
mhm.
so yeah, we all aware, but yeah, so continue. Well,
Yeah, I'm happy that you say that we are all aware about that because most people I talk to in Greece and even traders, traders with years of experience, don't recognize those potential that potential, and it's kind of crazy actually to not see that kind of people want to expand their knowledge and their database mining. And anyway. So I mostly use prop firms for my trading because technically, even if you get a desk at, let's say, Morgan Stanley, you would have some rules, some drawdown, some minimum and maximum drawdown, and some minimum and maximum betting. Also, which are rules that most prop firms do follow. I don't believe that it is an easy game. It is a very hard game, especially when you don't have capital by your family or whatever endeavor other you have. But it's elevating, and I don't mean that financially. It's elevating mentally and physically. It makes you take a look at the world that probably you haven't seen before, uh, like say the manipulation, the movement of the markets, the great capital movement between
yeah.
countries, assets, all this. It really is an endeavor that it should be that hard because it makes you very hard person. It makes you a very hard person, very, very clever person. It is.
So you're
Uh,
you're actually enabling us to dive deep into the first question that we have
For sure.
prepared
The million dollar
prepared to you.
question,
So
actually.
Alan,
Yeah, sure.
yeah, Alan,
So,
go for
Marius,
it.
as a mathematician and as a
mhm,
founded futures trader, what initially
mhm.
drew you to the world of future trading, and how has your mathematical background influenced your trading strategies and decision making processes?
Yeah, sure. Okay, first of all, let me start with
Hmm.
this. because I've been teaching math for 12 years before transitioning, and
12 years. That's a lot.
yeah, since I started the college, the university, I started teaching first year, so it is a lot. Yeah. What I mean, being a mathematician gave me an advantage slash disadvantage to the world. That is being able to understand many things that others don't makes you kind of unhappy, if I may say. So uh, I kind of used all that knowledge into trading, but it only saved me some time. I don't believe that someone should know mathematics or should be able to recognize statistical patterns or whatever to be a trader. It's
By the way,
mostly,
by knowledge you mean statistics, right?
yeah, mostly statistics. Yeah, yeah,
Mostly. Okay.
yeah. Moving averages, percentages, which are the things that as a trader anyone can grasp. It's not something that you should have a bachelor in mathematics to grasp. So, to anyone hearing this, don't let them down that I have a bachelor in mathematics. I could do this with anything. I mean, you don't need to have anything like that to become a trader. It will certainly save you some time, but you don't need to have it. It's good if you do, but okay. Oh, I can see you now. Perfect. So, yes, I have seen people getting the bachelor's degree. That's a popular joke I make when with my students. I've seen people take the bachelor's degree in mathematics that I'm sure when they go to sleep at night, they put earphones with inhale, exhale, so they don't die in their sleep. Uh, that means that you train your brain. That is all you need. You train your brain to trade. You train your brain to learning mathematics. You train your brain to love things. Everything is about training your brain. So if you put the work in it, you don't have to fear of anything. That's what I want to say to if anyone's serious about the bachelors and other things. Um, I would say the most effective thing that my bachelor did was the risk management part because it was quite easy for me to grasp that with 1 to 2 risk ratio reward, even if you have 50% win ratio, you're okay. You're basically okay. So if someone that wants to start trading gets along with this idea that it's a long game, it's a marathon, not a sprint. And we also have the Olympics this summer. Trading is a marathon, is a race that you start now, maybe in the middle you stop for a bit, you stop for a drink, maybe you stop for a talk, I don't know, but it's a marathon. You start running and you don't think about when it's gonna stop. You just start running. Yeah, that's basically it. Okay, sure.
Yeah, so actually those are great insights that you have just provided us. But I want to ask you a deeper question.
Mhm.
After 3 years of trading, how do you mitigate your pain points in trading? Like what are the difficulties that you experience? How do you handle them? How do you get along with your fears of trading and you take it into a more particular or more practical sense that you
Mhm.
enable yourself to trade on?
Yeah. Okay, that's a great question. Uh,
We all ask great questions, right?
I that's good actually. I'm gonna answer in two parts.
All right.
The first part is I call upon the meme enjoyers, the meme where the Bruce Banner looks behind and says, I am always angry, if you know what I mean by the Hulk. Bruce Banner is the doctor who is the Hulk in the Avengers. And there is a scene where they ask him, how can you not be Hulk and you are Bruce Banner? And he's like, that's my secret. I am always angry. That's my secret in life. I am always stressed. I am always stressed. Even if I go out to enjoy something, I still feel stressed. So trading for me was kind of an easy thing to grasp on because I live in stress. So that's kind of a thing of me that intrigued me. The second part lies
You live in stress
on.
because of trading?
No, I live in stress because all of my life I lived in stress. I don't know
Got it.
exactly why. Yeah. I guess that's why I don't have much hair also. Yeah, anxiety is a big factor in hair loss. That's why I say. Trading helped me to control that stress because you had to control your emotions. One big thing that every trader has to understand is what a healthy curve line looks like. I mean, I pop up 100K account of, let's say, Top Step, one of my companies. Okay. First day, plus 200. Second day, plus 200. Third day, you have to admit that there must be a red day somewhere in there.
Yeah, of course.
Yeah, you have to expect it. I mean, you can't look at your daily or your journaling and be green, 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 green. No, something is not right if that's the case. So, if someone that starts trading now, keep in mind that a red day is to a trader what the electric bill is to someone who owns a restaurant, let's say. I don't know if you. A red day is my business
Yeah, of
expenses.
course, man.
I mean,
Uh-huh.
exactly. All businesses
And
have
how do you
expenses.
manage?
Sorry?
How do you manage? How do you manage? How do you manage
Uh,
all of it?
how do I manage all my risk management strategies? You mean?
No, no, no. What I mean is, how do you manage your feelings, your actual feelings within the game of trading?
Mm-hmm, mm-hmm. Um, okay, there are some tricks. Uh, Two of them are physical. The two of them are mental. First two physical tricks is when feeling stressed out, just sip a glass of water, stand up, take two deep breaths, take a step back, as we say. Okay, and just give your time to yourself to cool down. One, that's the first trick that helped me. The second trick, the second physical trick was the cold shower. I mean, okay, you probably have heard it this a lot of times, but trading, if you want to be a trader and not a gambler, you have
Mhm.
to control the emotion that tells you are wrong. For you to be a trader and not a
What do you
gambler,
mean? What do you mean?
yeah, I mean that there is a thin red line between a trader and a gambler. Thin, very thin
Mhm.
red line. That red line is when you are able to admit when your trade, when your decision was wrong. Because as a trader, I do my analysis, I place my order, my mind stops to be objective. It wants the TP, it wants the price to go to my TP. It's my job as a
Yeah, of
trader.
course.
Yeah, but it's
Uh-huh.
your job as a trader not to feel that. You shouldn't feel that
Hmm.
because anytime your analysis could be wrong. You should close your trade
Yeah.
in a small loss. But the gambler says what? Oh, it's okay. It will go my way or it's going not
It
my
sticks
way.
to the trade and
Yeah,
right?
she will be happy with the outcome. She will be sad if he loses, but she's mostly a dopamine junkie. She's alive as the the sphere spins around the roulette. As long as it stops, it doesn't really matter what the outcome is for the gambler. All that matters is for the sphere to spin around the wheel. As a trader, it's the opposite thing. You have to be able to close your trade in a minimum loss if you think that you were wrong.
So
And,
it's more of a game of a risk management, right?
exactly,
So
exactly.
how do you manage your risk within future trading? Like, can you please elaborate on the risk management techniques that you employ to
Mhm.
protect your capital and ensure long-term profitability?
Okay. Uh, one classic trick that someone can use it's the Achilles and the turtle paradox risk management type. The Achilles and turtle paradox is that if you put a turtle at the half of the stadium and Achilles start at the start of the stadium to run, every given time the turtle will be ahead of Achilles because at let's say 5 seconds the turtle would have moved that much, but Achilles would have moved much less. If anyone wants to search, Google it. Achilles and the turtle paradox. Which means what? I place a trade, let's say that I have a fresh account, okay? Fresh
Mm-hmm.
100 account. That means that it has around 300, around 2000 drawdown. So basically my account in prop trade is my drawdown, those 2000, okay? The easiest trick to do is go for 1% risk of your drawdown slash account, because if you have 2000 you shouldn't risk much more than 200, because that means what? You have to be wrong 10 times in a row for that account to be blown up.
Mhm.
But you can do something extra. Let's say that you have a loss, two losses in a row. The third trade should be half the size. If first trade was one lot,
So it's
you
like
lose
so
100.
you have to be consistent within your risk management in order to be successful, right? We all agree on this one. So
I mean,
let's say if you have like a more typical, if you're a type of more of a gambler trader, meaning that if you if you
mhm,
if you like the risk, if you like living among the risk, how do you
mhm.
manage your risk then? Because when you're
Okay.
successful with your trades, you want to make more, and when you have like a row of losing trades, you want to enter another trade to prove the market is wrong. So it's
Mhm.
like a revenge trading.
Yeah,
So
that was.
what I'm trying to say here is that we really need to understand how to get consistent within your risk management. Because if you're not consistent, you have literally no chance of being successful in that area. And I think that you can agree with me on this one.
Exactly. Okay. I believe that this is not exactly a kind of subject that it can't be answered with numbers. Why? Because the risk management I do for my prop accounts, it's much more different than what risk management I do in my live account, in my personal fund. Different occasions. But it's not that just that, it's in the person. Risk
Mhm.
management for me is a psychological factor that is bonded to the person that trades. You don't have exactly to be able to calculate every pip of risk you lose. That's not something that should fear you. I'm not with my paper and pen all time, and I'm like, oh, I'm risking now 300s, where 3.5 contracts should be. I'm not doing that. I'm not exactly like that. I risk
Mhm.
my daily, I have my daily risk, my strategy, and if I hit my daily risk, I close for the day. That's the most effective, yet simple, yet difficult skill for someone to achieve. Walk away from your PC with a red P&L. Accept the red day.
So
I
what do
think,
you mean? What do you mean accept the red day? Like
mhm.
we all need to accept the red day, but you know,
To
I
accept the
realize
loss.
that even a super successful trader, yeah, well, we always need to expect to accept the loss, but you need to have like a more of I don't know a different emotional capability to accept a red day,
Mhm.
right? So how do you develop an emotional capability to for the stock market or for the
Okay,
futures or for the forex
that's
market or for any market? As a
that
trader,
was
how do you
the
develop a reliable
mhm.
emotional strength?
Actually, that was one of my the second part of the answer. I didn't say the cold shower, how the cold shower affects my trading. Pre-market, pre-market, take a cold shower. Your dopamine levels will rise, so you don't have that dopamine addiction, trading, chasing, if you are that kind of trader, and they will stay high for almost 4 to 5 hours. It's pretty big time. That's something that maybe some people will cringe out when they hear, or but because not being consistent is like being a gambler, and gambler is a dopamine addicted person. If you can cut the dopamine addiction out of your trading, that's a very big plus. So if I begin my trading session with full dopamine reservoirs, there is much less percentage for me to do wrong. So a cold shower always helps. Risk management wise, all I can say is that if ντε και καλά λέμε εμείς εδώ στην Ελλάδα, if
Yeah.
you want to have a trade open so you feel like you do something, because most traders, they wait for the price to go to their point of interest to entry, and they don't have an open trade, and they're like, oh my god, I'm not working, I'm not doing anything because I don't have an open trade. No, you are waiting for your setup to be finalized and to be traded. If you see as a new trader that you can't control that fact, meaning that you can't be without an open position because you feel like you're not doing anything, open a very, very, very small position in a big time frame. Climb above 4 hour time frame, open a 0.01 lot in, let's say, GBP USD, and let it be there. I know it's not the same, but your brain will have that click of actually having something that runs. It actually helps. I suggest that no trader do that, because you have to educate yourself to be like a sniper and wait for the price to retrace in your point. But if
By the
you
way,
can,
do you use order flow? Do you use order flow within your trading?
yeah, I use order flow analysis, institutional levels, and intraday manipulation techniques.
What do you
That means,
mean? Can you please elaborate more on the intraday manipulation
mhm.
techniques in order
Yeah,
flow and everything
that is,
institutional level? I would like to learn more about this.
yeah, it's more of like getting to know what Nikkei does in comparison, let's say, to the London. I mean, there are certain days, certain time windows in the day where markets correlate and correspond with each other. Okay, so let's say at London Open, I have a time window where I expect to see some manipulation to the price where it would go and grab either the high or the low of the Asia session that happened just before. That's one kind of manipulation. Yeah.
All right.
Yeah, let's say that Nasdaq today was down falling from the opening. You saw that at some point it started retracing retraced up until the start, up until the opening of the day, which was the Asian high, of course. I
Mhm.
took a short there. I took a short there with that thinking that if it manages to take the Asian high, maybe I would see an upward movement towards the 70% of the volume of the previous day. But if it fails to go above this Asian high, which is the high of the day also, maybe I should consider a short here. This happens mostly on market opens. I mean, you look at the market open in New York, and 99 out of 100 days, it starts with the opposite movement of what it would do in the rest of the day. That's purely manipulation.
Yeah.
Some people with big guns just want to take a better entry, so they manipulate the price to the other side of what they expect to go, and they enter. Intraday manipulation patterns mean things like that in a certain points of interests, like Asian high-low, London high-low, 50%, let's say, of Asian. Previous New York high, maybe, or previous New York low. Those are all points of interest that an intraday scalper, because you kind of scalping if you basically you are scalping if you trade these kind of setups, should always consider in his trading. Oh, the Asian high is still open. Maybe that's magnetized. Maybe the price will be magnetized there. Oh, London is about to open. Let's see. The first half hour of the London Open, I want to see a manipulation and a liquidity grab. If I see that, and I see also the liquidity, that means that the price took an old high or old low where many orders were. Let's see. I will consider an entry there. Every intraday scalper should have at least an indicator that separates the sessions in his chart.
And to use those manipulations for his advantage.
Yeah. And to use those manipulations to his favor. Yeah. Because it's kind of easy, actually. It's kind of easy. Because if you spot in the day those points of interests and just wait for the price to reach those points and then translate what it does, trading gets kind of easy at that point. You just need to be consistent, be every day in the chart, be there and just continue. Yeah, order flow analysis is based on Sierra chart and bookmap.
For how
Most
long do you use Bookmap?
uh, should be less than a year now. Less than a year.
Less than a year?
Yeah, I think it was last year's July when I started. Maybe it's a year now. Yeah.
A year.
Uh,
And
but
how easy?
I didn't use straight away, so it's not. It have some windows of not using it. Sorry.
How easy is to read liquidity out of the Bookmap?
Yeah, it's the easiest thing to do. I mean,
The easy.
the
Really?
easiest thing I ever did in trading is read liquidity in bookmap.
Really?
I'm,
Can,
I'm,
can, can you further explain?
it's basically it colors it for you. You don't have to know any external knowledge. It just go and it colors you where are the liquidity pools. Points of interests. Yeah. I didn't need that because I had my strategy of spotting those liquidity spots, which is either inefficiencies or highs lows, because price either goes to hunt liquidity or either goes to fill inefficiency. That's the two
Mhm.
moves. Uh, so yeah, basically it's pretty easy because it colorizes the areas with the liquidity. One good thing that Sierra Chart did for me was the institutional level VWAPs, anchored yearly VWAP, anchored weekly VWAP, anchored daily VWAP, which are levels that show you what small frame investors and the high time frame investors are doing. And of course, some price action with the classic candle patterns, but not patterns. I don't use bullish flags or how they call it. I mean patterns like rejection. You see if the price went through your level or not. Stuff like that. Um, if I may add something at that point, in the past 4 months, 5 months,
All right.
Mm-hmm.
I have met with great traders, Greek traders, mostly because I live in Greek, but great traders and kind of over a 45-year-old. They all use either a robot that they have at some point concluded to, or EMA, RSI, and obvious, and the sentiment, which are things that work if you work with them properly and watch for the long-term game. But if now you, as AFEC, come here in Greece, go to the biggest
Will.
firm we have, because it's in my, I lived that. I lived that 2 weeks ago. I met the head of technical analysts of the biggest Greek financial firm. And when we started speaking the same language about technical analysis, and I started elaborating on bookmap, order flow, weekly VWAPs, etc., uh, she kind of looked embarrassed. You know what I mean?
Really?
Yeah, because she knew what I was talking about, but she seemed like she also knew that she didn't knew how to use. I know if I
So,
didn't.
so you really need to learn book mapping in order to be a successful trader.
No, not exactly. Not exactly. Not exactly. It's an easy
No,
way.
I'm joking. I'm joking. I know that they don't
Yeah,
really
yeah,
need to learn book
yeah.
mapping,
Sorry, I
but
didn't get that.
identifying liquidity zones is incredibly important. And
Yeah,
how do you
mostly.
identify how do you identify liquidity patterns? Let's keep it for the part B episode that we'll have with you. What do you say, Panis?
Okay. Okay. Super. Yeah. Okay. Maybe I would have my PC also because I'm not. I could share some charts with you.
Oh,
Great,
sure, yeah.
great. Yeah, of
Because
course, of course.
as I said, yeah,
Sounds
because
good.
I'm not using my laptop now, and yeah, I'm
Yeah,
not in my house actually.
yeah. All right. Yeah, just feel free with us. Feel free. By the way, this is being recorded and everything is being
Yeah. So
uploaded at the end of the session. So we would like to thank you. We would like to thank you for your time. We would like to thank for
thank you
collaborating with
very
the
much.
podcast. It
Mhm.
was a pleasure meeting you and waiting for part B with Panis.
Yeah, sure. I thank you guys. Really, it was a pleasure for me.